Hey traders, a very warm welcome to another better way to trade breakouts. Let's draw, and let's go with the black. We have our chart here. We have our resistance level here, or whatever it may be, prior high. Market is chugged up, and off we go. We're trading a breakout. We know what a breakout is. It's buying a break of resistance. It's selling short a break of support. If we don't know that, go and check out some other videos, guys, on the channel where we talk about that. However, I have talked about a better way of trading breakouts before, which was this, which is rather than buying this here, and the problem with that, which we talked about, is that, you know, you can be a bit late and then you get stuck on it pulling back. And under certain conditions, it's great. But for me, there's only very few conditions where this kind of momentum ignition breakout trade really ticks the boxes. Most of the time, it's not quite there. And so the alternative was to wait for a pullback to the support level and buy it here. And that's super powerful. That's really good because it gives you opportunity to be buying a pullback. It gives you buying a support that's now was resistance is now support. It gives you kind of a bit more room to breathe, especially if it stops down here. It's just a great way of trading it. So another way of doing it, and this can kind of be complementary to that or supplementary depending on how you trade it. So what I mean, so this is basically once you've had a breakout there and you've come back and you've tested that, you then buy a breakout of this. Okay, so you're not buying that initial one, you're buying this one here. So as the price then goes back up, you're buying this and you're buying it as it breaks through that for a subsequent break. Now, pros and cons of this. Obvious con is that you might be in a double top, but that's the same for any breakout, guys. You could be at any point buying it when it's irrelevant. Sometimes it might be chasing it. You feel like you're chasing it a bit. I'll give you that as well. That might be an issue. But the good thing about this is the price action. Now, I'm not going into loads of depth here. There's loads of other kind of things that we want to see before we even get involved with trading breakouts. And if you want to find out more about that, go and check out the description below. But you know, there's loads of things that we need to see lined up before we even want to get involved in taking momentum ignition breakout trades, because they are vulnerable to pulling back. As we know, markets don't break out majority of the time. They'll rotate, they'll fake out. So once you've got these conditions lined up, you're like, yep, then this makes sense. Okay, it makes sense to say, right, okay, we've pushed above, we've held above, we've tested, and we've done two things that are indicating strength. We've broken out of here, we've pushed up to high. That's got to be decent as well. So we've got to have a decent level, positive level there. Good volume. Okay, not going to go into too much depth here, but we want all these things to be ticked boxes. Pull back, that's held, and now we've gone to a fresh high again. There's loads of things that are stacking up to suggest that this is kind of a bullish move and we may well break out to an ultimate high. So waiting for the second break seems counterintuitive, seems like you're chasing. Again, lots of things have got to be in play. Prior action has got to be right, volume's got to be right, time of day has got to be right, all those other things. But if they are in play, this is often a very, very good way of getting in, because your obvious stop is going to be just under that prior low, right? It's very systematic. You have to think about it too much. This one, you kind of have to judge it and go, well, how far do I need to go? Blah, blah. This is basically, okay, when we break through, I'm going to be that plus a few ticks, and then have my stop under that prior low, and I'm away. And I'm using the fact that it's broken out once, it's pulled back, it's not gone lower, it's broken out again as a confirmation that this isn't going to fake, this isn't going to fail, and I'm going to get pushed to the highs. Now, of course, can it fake and push back lower? Of course it can. But the advantage also, one final thing, guys, is that if it does, it could still flag above that key level, which is a brilliant trade. A brilliant, brilliant trade. You know, price action is suggesting this is very, very strong. So even though you've paid up a little bit for it, you're still in what could potentially break out a little bit later and be a great trade, because it's doing a broader bull flag in a kind of bigger environment. Anyway, guys, that is another better way to trade breakouts, rather than the traditional buy it on the first break, rather than the kind of second tradition of buying it on the pullback, is buying it on the subsequent break. And it does appear like you're paying up for it, and yes you are, but you're kind of exchanging that for more justification that the bulls are in control here and there's a lot more demand than there is supply. Take care, guys, whatever you're doing. Bye-bye.